Hello, social media. Today's topic is about financial risk in the crypto industry because I talk about cryptocurrencies and I'll be talking a lot about blockchain in the future. I said Coinbase in the past. After the CEO's remarks today, do not buy the stock. It's complete BS that if Coinbase went bankrupt, which he says there's no chance of, there's always a chance of that. They should model it, even if it's 0.01% or whatever. Some retail consumers may not see their money. You're safer buying crypto like with an interactive broker or Robinhood because they're regulated there. So if you want Ethereum or Bitcoin exposure, do not buy it at Coinbase. So on their about section, they say they're a more fair, accessible, efficient, and transparent financial system enabled by crypto. Why are these guys not regulated like some kind of stress testing or whatever? Or do we have to wait until they're like as big as Lehman Brothers or Bear Stearns, in 10 years or whatever, and they cause a catastrophe? One thing, like, I'm seeing so many risks here. Like, how the hell is US stablecoin Terra allowed on this platform? And they'll tell you risks or whatever. I think they have a responsibility of, like, it's so obvious. So US Terra is one of the top three stable coins, and the way it's regulated is by no backing, thin air, arbitrage, and this other coin called Luna, and a burning mechanism to keep things simple. Now, when I saw the thing, I didn't understand it. I kept researching because I couldn't believe it. I knew that when things get really bad in the crypto market, this is gonna fall really bad. And things didn't even get that bad. Bitcoin could easily go to 18K. It experienced, I guess today, like a George Soros style attack, right? And it just went to 30 cents. Now on Coinbase, they may say, well, we said in the description, they could have updated or whatever, that it's a stable coin not backed by anything. Yo, you're treating it like the USDT, which is backed by dollars, because the coin has no chart. If the coin has no chart on your platform, you're also implying that it has no chart, it's going to stay at $1. Like, how are you allowing people to even purchase this? Like, your job is supposed to be also to educate people and make sure they're safe on the platform. Like, shame on you guys. I don't know what's up with the risk management there. The other thing is, your money is insured transitively. So I guess they can't FDI insure it, FDIC insure it or whatever, 250K. So they may put it in some banks and insure some of it that way. Okay, so if you guys actually go bankrupt, and he said they're gonna update the terms of service, like, how are these little things getting past risk management? Am I supposed, or the user is supposed to trust that you guys will not go bankrupt when you couldn't do something that simple? You know, there is something called contractual risk transfer. I studied it in insurance. So you could have a contract between you and the retail investor, putting specific language in there to actually protect the retail consumer, like, completely. It's just mind-boggling, that you could come out and say that, and when people do their research, they see that yes, this is a US based company in San Francisco. What could go wrong? Yo, lots of things could go wrong. Bear Stearns and Lehman Brothers, they were regulated, and things still went wrong. And I'm talking about this topic today because we shouldn't be waiting like in 10 years when they get huge and could actually cause a ripple through the economy. Like, if they went bankrupt tomorrow, whatever, like, it's not that big of a deal. But if they get huge and they go bankrupt in 2035, yo, it's gonna be a problem. And I'm talking about this topic because we're talking about regulating crypto. Yo, regulate the exchange that's operating like a bank. I use them. They have debit cards, Visa debit cards. So I think we should really, to just sum up the video, I think we should pay attention to these things and do maybe they should do some kind of stress testing, you know. They're gonna update the terms of service, you know, make a contractual risk transfer. So in case of a bankruptcy, the people's money doesn't go to bondholders. It's just very upsetting, you know.